what we typically do, typically meaning our second year, is we use this event to launch a very important piece of research that we do, which is called the World Insurtech Report. It's part of our World Report series. It's a piece of primary research, which means we go out and we interview participants in the industry. In the case of the Insurtech Report, that means we interview both insurtechs as well as executives as insurance companies to kind of figure out and take the pulse of what's going on in the marketplace, understand what this insurtech phenomenon means, and hopefully provide some insight as to how both insurers and insurtechs can take the most advantage of the opportunity it brings. So last year when we did this session, we called it a face-off. So we had a group of insurtechs and a group of insurers on the stage, and I did my best Jerry Springer impersonation as they hurled a bunch of invective at one another. You're too slow, you don't care about the customer, you won't scale, you don't understand risk. And we had people tweeting it, and it was all over LinkedIn, and it was incredibly exciting and invigorating. And so we decided not to do that this year. We decided this year to focus instead on partnership, on how what we're really seeing in our industry is the evolution of an ecosystem where insurtechs and insurance carriers are in fact on the same side and providing a new insurance experience, new insurance product, and a new way of conducting the insurance business. So some context on what I just said. Kind of number one, we issued the World Insurance Report back in June, and our topic was emerging risk. And headline from that report, there is desperately a need for new product in the marketplace to address emerging risk. Incredibly busy slide, but the key way to look at this is, if it's blue, it means the customers are concerned about it. If it's green, it means the customers feel they're being protected by their current insurance policy. And the black line means that insurers are actually doing something about it. So massive opportunity here in cyber, in the area of climate change, in the area of personal financial protection to adapt to the new economy, the new world we live in. And that's one of the things that we think is driving this new ecosystem. Second, and I think equally important and should be commonplace at this point, is more and more customers want to do business with their insurers digitally. So here we looked at kind of who wants to use what, mobile obviously continuing to grow. I think the more important part of the slide's on the right, and that is that tech-savvy and younger customers absolutely, from a majority perspective, want to do business that way. And so that's another area where we see insurers and insurtechs collaborating to provide those best-in-class digital experiences. And lastly, the slide that I'm least proud of. I've been in this industry a very long time. I've been an IT guy in the industry a very long time. And our ability to take cost out still is almost a flat line. You see here, kind of on the overall right, things are just beginning to look a little bit better in P&C. Makes sense because that's where so much of the tech innovation has been. On the life side, clearly a lot of work to do, and I'm very proud that we'll have representatives from both the P&C and life side of the universe to talk through some of these findings in a minute. But what's driving the marketplace of the future? What are folks really looking for? Kind of what are making insurers look to embrace it? And what are insurtechs focused on? Insurers are clearly getting the message of focus on customer, and customer is more of an experience. Customer is also product. So how do we provide an end-to-end risk solution? We just partnered with a home insurer in the UK to come up with a product concept around bundling alarm monitoring, smart home devices, and a home insurance all in one, I sound like I'm selling it, easy monthly payment. But that's the kind of idea, that's an end-to-end solution. It's protecting me against the holistic risk that I'm facing. Closing the coverage gap, how do we deal with the crisis that flood insurance already is in North America and will be around the world. How do we address all of these coverage gaps? That's top of mind for the insurers we spoke to. Not surprisingly, the Insurtechs are a little different. So they feel that they're bringing new business models. So we hear a lot about pay-per-use and on demand, or that there are just new players offering insurance in a better, different way. So yeah, Lemonade is renter's insurance, but a fundamentally different experience. So a little bit of a difference there between what Insurtech see and insurers see, but at the core of it all is really a desire to serve customers in a better and different way. So what does that all mean? Well, it means that we see Insurtechs and insurers coming together to create what we're calling the insurance marketplace of the future. In that context, from an insurer view, it means understanding all of my connections to all of the kind of piece parts that may tangentially or in a very real way affect the experience. So health insurance being disconnected from the actual provision of health care. The purchase of an item being completely disconnected from the ability to insure that item. Those things are going to come together, and that's what that left chart means. On the right, it means that all different kinds of opportunities for insurers to provide a panoply of services to customers. So, I was looking at this slide as I was preparing, and I felt that it might have been part of a kind of Sandy Weil battle card from the late 90s when the model was that big financial services firms were just going to buy up everybody and offer everything. And that's not clearly where we're going. Clearly where we're going is the ability to partner and become part of multiple purchasing value streams so that everybody's providing the best product for the customer, but that the customer experience is in fact far more seamless and it feels as if they're buying one thing. So when I go to my airline website and I purchase a ticket and it offers me travel insurance and I print the policy, that's a seamless purchase experience. The airline doesn't have to own the insurer doesn't have to own the airline. It just has to connect in a way that's truly one thing for the customer. So who do we think we're going to partner with? Who are the kind of biggest targets for partnering? And here you see kind of the view of the insurers and the Insurtechs. Well, clearly everybody thinks that within the insurance industry there'll be more partnership in general. But you also see here that banks, payment processors, healthcare providers, I gave the example of travel already, as well as other kind of marketplaces and retail players, they're going to become far more important parts of these ecosystems. And, the gold will go to those who figure out how to connect those pieces together and profit from the fact that the distribution landscape in insurance is so different from when I entered this industry, when there was a field that sold the insurance and a home office that processed insurance. You never hear the word home office anymore. It's all part of how do all of these pieces connect into a seamless distribution experience. So what does that mean for insurers? What do folks have to do? What do they need from a capability perspective? Clearly a need for organizational change, but we hit a few items here. Number one, a focus on a holistic risk solution. I mentioned that homeowner piece, right? How do I take all the elements of customer risk? If I break down on the road, or if I have an accident, do I need the same things? Is it a kind of associated risk experience? Why isn't that one thing? Number two, a focus on partnership instead of developing or purchasing capabilities. I call this one the new buy versus build equation. That's very common in software now. We think everybody's buying as opposed to building. That's all good. But how do we take that up a notch and really talk about buying capabilities and buying additional things that I can bring to the table as opposed to just focusing on software? I think the one, I always look at these results and there's always one thing that bugs me. Well, there's many things that bug me, but one thing that I want to highlight, shared ownership of assets. So this is actually truly what partnership means. It means the ability to kind of bring things together, and I think everybody wants to do more with data, But one of the key things that the industry needs to do is get better at sharing data assets so that everybody's not doing the same thing. Yes, there's ISO and LexisNexis and a few examples of that, but the industry as a whole, far less integrated, far fewer consortia, far fewer effective evidences of collaboration than in the rest of financial services. Hopefully that's an area that the future embraces. So lastly, kind of the payoff pitch and the introduction to the panel discussion we're going to have. Why? Why do we need this collaboration? Why should people partner? What's in it for all of us? You see here kind of the answers to that question. And it's really about three things. It's about product. How do I develop new offerings, extend my offerings, expand my offerings, make them full-featured? It's about experiences. How do I bring that best-in-class customer touch point across channels, across value chains, across partners, so that it's seamless, quick, easy, and maybe even fun? And finally, a little bit of the cost equation. How do I fill gaps in my business processes? How do I eliminate so many of the frictional elements that slow us as an industry down? It takes days to issue policies, in some cases weeks. It takes days and weeks to process. How do we take time out of the system, fill those gaps? Well, that's an area where we absolutely see the Insurtechs and the insurance companies come together. That's a highlight of the report. As you can see, we have a website you can go. The report will be issued on October 7th. It's great reading, and you can go there and join the conversation with all of us about the findings. In the spirit of conversation, we're going to actually have one now. So I'm very pleased and proud to introduce two panelists. First, and we had their pictures up, but now you can't see them. But you can see them. So we have Beth Eckert, who is the CIO of the property and casualty business at USAA, one of the nation's largest and admired insurers. And if you remember that picture of that kind of ecosystem of products, they're the only one who are doing all of those things inside of a single house and doing it really, really well. So I'm confident that Mary Beth will have some great insights into the topic at hand. And then Paul Tyler, who you can now see his picture and him. Paul is Chief Marketing Officer at Nassau Re. Nassau Re is the oldest startup on earth.
Correct.
Basically a restart and a purchase of a very old life insurance company, about 5 years old, and incredibly innovative in how it brings product to market, in how it approaches the whole aspect of customer service. In addition, Paul is the sponsor of an incredible Insurtech incubator that occupies a floor of their boat-like building in Hartford. So he's both an incumbent and an Insurtech. And perhaps most importantly, Paul is a graduate of the 1987 class at Princeton University, which is the finest class that university ever graduated. So with that, I will turn to Mary Beth and kind of ask you to focus a little bit on customer. So much of the excitement around Insurtech is driven by the role of new market entrants in redefining customer experience. How do you see the evolving ecosystem driving an evolution in terms of how insurers approach the questions of customer acquisition and experience? And how are you partnering with other players to do that?
Absolutely. Thanks, Seth. So welcome, everybody. This has been a great Insurtech. The ITC has been great, the Connect. So, the ecosystem is really a great opportunity, and it astounds me every day with every bit of research that I do and trying to keep up with pace of play. But it's really, the Insurtech space back in, I think it was about 2011, was $250 million. It is now $2.3 billion. And one thing I was reading, about 90% of that is partnership. It's not disruptors, right? It's enablers. So, and another fact, just and I'll get off the numbers, but I love numbers, 38% of that in the United States. So the remainder is a global. And I think that's really what's exciting a lot about this ecosystem is it's really picking up the pace on the global play, right? And trying to figure out how do we play across this economy that's evolving. But, it's really about the disruptors and the enablers. I think we all know about the disruptors. You mentioned Lemonade, great peer-to-peer play. The enablers is a little bit more where I wanted to focus today because at USAA, that's really where we're seeing the play going. The disruptors we need to stay attuned to because we don't want to be the next blockchain or the whatever, right? Not blockchain, but the next video. Blockbuster, thank you. And but really from the enabler space, it's about taking a look at how do you look at this ecosystem that's so broad across the insurance spectrum and figure out how do you play with the various players who are not looking at that broad spectrum. They can't. That's what the incumbents do. And really picking and choosing where do you want to have help in this digital space, in this ecosystem, as you called it, the bouquet of services, right? And at USAA, we're really looking at the financial security of our members. So it enables us to take a look at this in a little different lens because we're trying to figure out what products and services really do protect that financial security, provide that financial security. And we can do things like provide products and services that aren't all financially motivated. It's not all about the bottom line, it is about our members. And so when you take a look at that, what are you thinking about? You're thinking about cloud and mobile first, number one, right? Because if you don't have the infrastructure to go to the cloud and you can't do it mobile, then you really can't play in this new ecosystem. And I think a lot of the incumbents are struggling with that. But you see a lot of the Insuretech space focusing on that space, right? And then it's all about data. Anyone who's walked the floor out there on this conference, you see all the data players, all the aggregators, all the third parties. So we as an insurance company at USAA have a lot of data, right? We have member ID and we're able to connect that data. I always tell people that's the golden ticket, right? That's something that a lot of people aspire to do, and we at USAA can do that. So how do you take that and how do you connect that with external data to really understand your member, your customer, and provide them the best products and services with speed and ease of service, right? And then you start to layer on that AI and the machine learning, right? Because now you can do things with that data that you never could have done before. And incumbents aren't as good at that as Insuretechs are. And this is where you really start to see the ability to get those analytics into play. I mean, if you take a look at USAA, we're doing a lot around behavior-based insurance and partnering with TrueMotion on that and really getting out into the space and making sure we understand driver behaviors, not to penalize poor driving behavior because that's not what insurance is all about in this day and age. It's about rewarding really good driving behaviors. I think you can take a look at commercials from one of our competitors where the woman and her husband are driving to the hospital. She's in full labor and she's saying, don't jeopardize my discount, right? But it's up to 20% discount when you have good driving patterns. And really being able to price appropriately over time as you get that data, and it allows us to see how are you as a driver, how are your family members as a driver, where are you going, things like that. And then the other big space we're playing is really around touchless claims. There's a whole ecosystem here of how do you take in first notice of losses, the FNOLs, and do that even using telematics to predict, or to see, not predict, to indicate when you may have had a loss occur, a claim, let you know and you verify it. Then you can submit photos. We can process those photos, apply some machine learning, get it back to you to say, this is the estimate of your repair and here's where you need to go. And really going after that full end-to-end, that's how the ecosystem is starting to figure out and help us protect the member, ease in use of the products. And I think you probably saw just yesterday, I have to do a little PR. We just announced our partnership with Google yesterday on that machine learning of these photos and being able to take that. And we've been working in their labs with them for quite a while and being able to shoot the photos up to that model. And it comes back and says, these are the components of your vehicle that are going to need replacement, and shoot that over to the parts distributor and the repair shops. Pretty good stuff.
A lot of stuff there, So Paul, how does a relatively new life insurer go get customers in this day and age?
Yeah, very interesting question, Seth. Thank you for the introduction. By the way, you did pave the way for me in this insurance industry. Seth was a member of the class actually the more esteemed Class 86, the same institution. So, yeah, I think we're in an interesting place. I had a real interesting opportunity that I couldn't say no to, which was how do you create a new brand today, yet have a legacy? I mean, our Phoenix Life Insurance Company actually insured Abraham Lincoln's life. I'm not sure it was the best underwriting decision. We did pay the claim, so we lived up to the promise. Acquiring new customers is entirely different. Now, we've restarted our traditional agent channel. I think on the life insurance annuity space, traditional agents are going to continue to be a very relevant, very powerful distribution channel for the foreseeable future. I think in the independent channel, though, how the agents go to market, how they interact, how they attract customers is changing dramatically. At the same time, consumer shopping behaviors are completely rewriting how people interact with their insurance companies. So, I'm sure you've all talked about this in many discussions. I have my fitness watch. Am I buying a fitness watch with an life insurance policy, or am I buying a life insurance policy with my watch that rewards me, just like the driving does for behavior? If you believe from a consumer standpoint that is how people want to interact with insurance, well, let's reverse engineer the problem. Mary Beth said it. You can't do this on these old systems. You have to be, your entire business has to be API enabled. So as we've started to build our sort of front-end systems, we said we're not doing anything old. We're going straight to the cloud. Our direct consumer business we've engineered to be completely API enabled, from quoting to actually submitting applications. Not perfect. We've done this sort of piece by piece, but I think that opens the opportunity to all kinds of interesting partnerships that weren't available even 5 years ago. New sets of partners. We've, YouTube influencers may turn out to be the channel of the future for all we know. How do we wire business for that? Same point on the independent, on the advisor channel, face-to-face channel. Their expectations are changing as well. Where's my case? I sent it in a couple hours. I don't see it on the system. We're seeing many of our agents actually doing some really pretty interesting digital marketing on their own, and they expect the carriers to be able to engage and support their customers and their agents the same way.
Great. Well, thanks for that. So let's turn to the second piece of the puzzle. So we go from customer to product. And our research suggests, Paul, I'll put this one to you, that more and more insurers and their customers are thinking about making a transition in how they view the insurer as being much less of a payer and much more of a partner in that risk equation and mitigating that risk equation. How do you see the ecosystem participants in your building and others help to drive those products of the future, particularly around additional services and capabilities that get bundled in with the insurance product? How are you thinking about that? How are they thinking about that?
Yeah, I think we have a chance to actually kind of redefine the products and services that we bring to market. And I think a lot of these, there's no way one organization can do this by themselves. I think, I've said, we've talked about this a little bit, right? I think small is the new big today. When I say small, so much of our industry is, and the way our organization actually behaves is so defined by batch systems. You think batch process. I fill in a big long form of 50 questions, stick it in the machine, out comes an answer 1, 2, 3, 4 days later. And oh, by the way, the system has to take in a premium that's $2,000 or a deposit that's $100,000. It just doesn't. Our compliance, our back-end services are all kind of engineered for that. Wait a second, what if? And it's also kind of impeded a lot of the efficiencies, because wait a second, I could take the cost of processing a life insurance policy from $300 or $400 down to $1. Well, if I'm selling a policy with a premium, that's over $2,000, it really doesn't make a difference for the price. Okay, but if now suddenly if you think the other way, wait a second, if I could actually underwrite a policy for $1, how small of a policy could I write? I think microinsurance is where the future of our particular sector of the business lies. Now, how do you get there? We'll talk more about the ecosystem. I'm proudly wearing my Hartford socks. We'll get you a pair if you're Seth. If you're,
Absolutely, nothing more
if
than
you like a pair.
red socks.
Yeah, this is all about the ecosystem. I think if you think about thinking that got us to where we are before, proprietary. Where we need to go in the future is open source, and the industry's kind of gone a little bit, kind of tiptoes over to the open source stuff. You think. For those of you who've been in the business for a longer period of time, think about what Accord did with the XML standards, right? Okay, here's a generic language everybody will use to take this system to talk to that system. Sounds like an API. The problem was all the carriers and all the agency management systems all came up with their own version. Wouldn't talk to each other. Yeah. Couldn't translate. Oh, by the way, you have to every time you send one of these transmissions, I have to send somebody a royalty. I think the new world is how do we start to open up our APIs? What if we actually had to file, instead of filing forms with the states, we filed APIs, right? I think this is the kind of world we've got to engineer, and the people who are, for instance, we're doing, we've got a great group of companies in our company, but I think everybody realizes, incumbents and the startups realize that. It's just too big of it's too big of a problem for a single company to disrupt. You have to do it in partnership.
That's great. So Mary Beth, how are you? I mentioned before you have a broad cross section of products that USAA offers its members, probably the most diverse. How are you thinking of new products, new services, the evolution, and how ecosystem participants can and should play in that?
Now, that's building a little bit off of what Paul talked about. I think we are in a tremendous area of opportunity to really redefine how do we take product to market. What are those products? I think the UK is really starting to pave the way without some of the regulation that we have here in the United States to do some of these on-demand services, insurance services. But we at USAA are looking at it pretty broadly because, as Seth, you mentioned, we are a bank. We are an insurance company offering P&C, life, and even health. We also have an agency for products that we don't want to write on our paper. And then, oh, by the way, we also give member benefits in terms of rental cars or sending your mom some flowers or purchasing a vacation package benefit. So I think it's really that opportunity to take a look at how do you take that and bundle that differently for your member. If you're applying for a mortgage and we're underwriting that mortgage, shouldn't we also be asking you about homeowners insurance at the same time and making it easier for you to go into that mortgage process without having to secure your own home insurance on the side, which is a very cumbersome process today. So it's really taking a look at those opportunities across the ecosystem. Now, within the ecosystem, really IoT is where a lot of stuff is happening as well right now. You take a look at all the water sensors. I think everyone who owns a home has probably had a water claim at some point in time. Very expensive for you, very expensive for insurance companies as well. There are many entrants on the Insurtech space who offer water sensor devices that really prevent that loss. And it's all through your phones, and it's an ability to immediately know you've got a leak underneath your water heater. And boy, we can let you know immediately. How do you protect your assets? How do you protect your lives? And really avoid all those claims and things like that. So I think, we thought a few years ago, for example, OEMs were not going to offer insurance. They're selling vehicles. Well, guess what today? They're offering auto insurance, right? So at the time you purchase a car, you can also get your insurance. Like, how do you start to look at this world just a little different and really seeing how that ecosystem grows?
Yeah, I think it's so difficult and it's getting more difficult to acquire customers today. You think with GDP, with do not call lists, it's very hard to build a trusted relationship. How do you monetize that? Few companies have the luxury of USA being able to manufacture as many products. I think you will have to partner if you wanted to generate adequate revenue today to cover some of the expenses of the infrastructure.
Okay. So one of the folks in the audience had a kind of follow-on question that actually mirrored what I was thinking when you were talking. So maybe just 30 seconds or so on the role of regulators, and does the regulatory landscape have to change to really address the needs of the customers of tomorrow? So,
You want to go first? You entered into it.
No, I actually think the regulators, I think, are a step ahead in some ways. I mean, we have a great team at Connecticut. In Connecticut, I've talked to a number of other regulators. I think a lot of times in companies today, people say, "Oh, I can't do this because of regulation. You can't do it because." I'm not sure the discussions are taking place as quickly as they should. I think we've got a tremendously forward-thinking set of regulators across all the states at this moment. I think it's up to us to really push the limits internally.
Yeah, and I think it's 50 state regulation. There was a speech earlier. Entrance into the bank, you're regulated at the federal level. In the insurance space, you're regulated at the state level. So you have to work through all the DOIs, and so that's not a lot of people can enter into insurance. And I think some of the disruptors found that it's a much more overwhelming process than you can really navigate very easily. So I think that's one aspect of, we've got to make it so it's more accessible and easy to do business with the departments of insurance. Just keeping pace with the technology. I mean, we're all struggling with that. The DOIs are as well, right? You mentioned earlier, like, this should all be electronic at this point in time. It's not. I mean, and that's, I think, where a lot where the industry needs to go. And also really getting our hands around data and data sharing. You mentioned it, Seth. Like, we've got to be able to share data and have these consortiums that are open to that. But on the flip side of that, we're very, very conscious of the privacy of our members and the protection of that data, and the regulators have to share in that, right? So it's really navigating the pace at which this industry is changing, and how do the regulators keep pace to make sure there's governance over the data and the insurance providers and everybody else in the ecosystem.
terrific. Thank you. Thank you. And then there's one more question, just to we have another minute before we move to the next topic. Embedded experiences. So what's your position on using embedded experiences to foster new sales? I'm not sure I know exactly what that means.
I was going to say embedded experiences. I could interpret that a few ways.
I'll interpret it as, imagine I have, I've built a community with 10,000, let's say 10 million members, okay, doing health and fitness. It's a CrossFit type of system. I know the healthy people. I'd like to offer them life insurance. They've come to my site, they've logged in, and how can I make it as easy as hit a button? I've got all this information over here about this person, their health, their home, their family. How can I sort of expedite the data transfer across the carriers? I'll interpret it as that. And I think this is one that kind of crosses the regulatory boundary, is I think people just need to understand, if I have permission for data over here, how do I make sure I've got rights from those individuals they've consented to give me information here? And oh, by the way, if they said something here and I ask it this way, am I putting giving the information to the other partner in an accurate manner? Mm-hmm. So I think there's learning. Insurance is highly regulated for a reason. We don't want to misrepresent our products. You don't want somebody thinking they buy health insurance when it turns out it really is life insurance. And I think part of it's data, part of it's systems, part of it's also just knowledge and understanding about the why behind a lot of the regulation.
Yeah. Well, and I'll take it a little bit, just playing off the life insurance. We have an event that we take very seriously at USAA, and it's when one of our members calls and they're going to be deployed, right? That's a very meaningful life event, right? And the embedded experience is really walking them through what is involved in being deployed, from the financial protection of them and their families. Do they have life insurance? Can we take a look at their auto insurance? Are they going to park their vehicle on the base? Therefore, we can decrease their coverage and save them money during that period of time. Is your power of attorney set up? All these sorts of things to us are embedded experiences. And I think that's what this ecosystem is really becoming, is taking a look at the person as a whole entity, and how do you protect them from an insurance aspect and a banking aspect for us.
Great. And we'll take one more, just because it's kind of hits exactly on what you're saying. So someone asks, perspectives on the ethical line when using collected information to sell product that is not requested. So that's the kind of, I think you might like, based on what we know about you, you should. How do we wrestle with that? I mean, people can take that the wrong way.
Yep. It's interesting. I think the world is changing every day. What we thought was going too far on data 5 years ago is becoming a norm today. When I call up to get a quote, when anyone calls to get a quote and I give my VIN number for my car, I expect you to know about my vehicle. I don't want to give you all that data, right? Or if I give you my address, I want you to understand my home and my property, right? If I send you a picture with a firearm on it, I want you to be able to tell what that is and how to best insure it, or whatever it may be, right? So I think that's a blurring line. Where I really go with that is that it's all about the protection of that data, and it is not shared in a way that shares any personal information outside or in any untoward manner, right? And I mentioned that just a little bit ago. It's like you have to take data governance very seriously. Paul, you mentioned that as well. And you've got to be able to understand where those lines are, because you cannot share personal information outside into any partnership or into any consortium. And that has to be the underpinning of every transaction that you do and every new product and services that you partner or put out in the market.
Yeah, I think it's interesting. The line is very fine between what's creepy and what's cool.
Yeah, that's a good way of putting it.
I get on Amazon and look for some product that I suddenly discover I need, and to go through and see the recommendations of what people bought who looked at this helps me educate me in the product process. That's cool. Suddenly seeing retargeting from some strange site because I think I said something to a device, that verges on the creepy. So I think it's some of this we're going to learn. I mean, and I think I would second everything Mary Beth says from a data, from a regulatory perspective. I think as an industry, I think we just have to sort of adhere to some really sort of fundamental core sets of belief. I should respect you. I should. Marketing is not, standing up here with a megaphone and screaming at you until you, unsubscribe from me. It's knowing you very well, because, Seth, what may be incredibly useful for you is Mary Beth could say, why, Paul, are you saying this to me?
Yeah.
So I think we've got to know people, and it's not, we've got to know people first, we've got to engage with them, and before, selling should be the last thing on that step. Now, we have to sell in order to stay in business, and I think this just sort of comes back to why partnerships are so important. If Mary Beth has built a tremendous relationship like she did with my dad, he was a USAA member, I'm now a USAA member. That's something you want to protect, you want to keep, but there's some other opportunities and partnerships that, may be exceptionally valuable if USAA has vetted and says, Paul, we know you and think this is of use. Wow, USAA has just stepped up a notch in my, in my esteem.
Great. So we've talked a lot about product and customer, and now we have to turn to operations.
Yeah.
So we have a CIO, we have a CMO, and we're going to beat up on operations. So a lot of our research shows the extent to which straight-through processing and efficiency benefit from all of the ecosystem participants, many of whom we actually see in the exhibit hall.
Yeah.
Right. So how does an open insurer change the value chain? How do you see these participants and the handoffs and the kind of cast of thousands you're actually using to service your customers? How does that all work, and does it make you more efficient, and how are you thinking about kind of the next steps in that evolution?
Yeah, I think it's really about how you go to market with it and how you think about it, right? So I mentioned earlier, it's all about mobile first. I would be hard pressed to see if there was anyone in the audience who doesn't have a phone. And in fact, globally, 36% of people, 37 perhaps, consider their phone their primary device. Like, that's astounding in a very short number of years. So everything that we do, we want to be able to enable it to be done on your digital device, because most people don't want to pick up the phone and call anyone anymore, right? We have MSRs, member service reps, that will answer any questions at any point in time, and they're very good at what they do. But to change your address, you don't really want to have to call someone and do that. You just want to take the 20 seconds. But then you get into more the claims side of the house. I touched on a little bit of, Paul, you mentioned it's the API-driven ecosystem, or infrastructure layer, right? That integration layer that is so critical to how do you interact effectively with these partners. How do you take and make sure that you are monitoring performance, availability, all that other stuff across the entire ecosystem, and at the same time enabling straight-through processing? Because as any of you know, in the claims side of the house, for every efficiency you gain, let's say you're gaining a point, that's a lot of money that you're saving, right? And you're serving the member a lot more efficiently, so they're happy as well. So, I think I'll give one example of blockchain. So, State Farm and USAA have entered into an agreement on subrogation on utilizing blockchain. So subrogation is when you and I, Paul, are in an accident, you're insured by USAA, I'm insured by company X. The settlement of that payment is called subrogation. So it's when one insurance company pays another, right? And historically, this has been done on a very transaction-based antiquated system, right? It was very manual based. So when we entered into this problem statement with State Farm, we said, how could we turn this around and make this a monthly reconciliation of the ledgers and utilize blockchain to do so? Because we'd like to bring other insurers into the consortium as well, because all of a sudden now you take this very transaction-based system, you utilize a very advanced model to enable us to do this ledger balancing, and it's about 80% efficiency. So that's what this is really enabling when you're talking about. This is not just step change. We're talking about massive efficiencies that get gained across this. Or think about yourself with the ability to, we partner with Snapsheet very effectively for many years now, being able to ingest photos that you send in on your first notice of loss, right? And us being able to quickly start the adjudication of that claim. And I just mentioned with Google, even now applying machine learning to understand where does the damage, has it occurred on your vehicle? And you don't really even have to interact necessarily and to get that whole process started. Now we have to retrain people, we have to protect data, we have to really think about all these things as part of this. It's not snap and you go forward on this stuff, right?
So just a follow-up on that before I turn to Paul. So you and State Farm doing something together.
Yep.
That's if that ain't partnership, I don't know what is. How do you see that as something that extends to the entire property and casualty community? Is that part of the vision, or is it just we totally do X number of claims with State Farm and we're going to get Y value from it?
Right. The whole value of blockchain is when your consortium gains more and more partnerships inside of it. So really it is the fact that State Farm and USAA partnered to develop the model, tested the model. You do that without real data at first, and then you run it in parallel, and now we're both working to get that integrated into a production environment, and then inviting others into the consortium. The whole value proposition is to get this across the industry. Awesome. Absolutely.
Awesome. Paul?
Yeah, no, I agree. I think machine learning is I think it's, for all the hype, I think it's well deserving of it. I think it offers the opportunity to drive will drive incredible efficiencies to the business. However, I think it's going to take a huge change in how we've all organized our operational areas and how we run them. It's very different. You think of operational platforms today as onboarding individuals to sit there, train them one by one to get up. Now, what if we're in the business of actually training models? And we have a May 2020 vintage of first notice of loss estimation, right? It implies a whole different set of skills in areas that really haven't changed that much over a period of time. So I think this is going to be kind of exciting to watch and be a part of. I think the other part is, Seth, is that I think sales operations actually has a huge opportunity to become much more part of the sales process, meaning, service is, whether we like it or not, the quality of operations, how people perceive it, it's transparent. And I think we've got to embrace the sort of transparency, how we're doing, let our customers lead us in the type of, response we have to make. So, we actually did a survey. We did get a ratings upgrade, which is great this last year. But we asked people who'd purchased insurance over the last 6 months to basically rank the importance of rating agency ratings over, Google type reviews, open source reviews. And you know what? They're equal. It's stunning what's happened in a few years. So I think if we don't pay critical attention to the quality, I think that's companies that don't or do so at their own peril.
Great. So we have time for one question, and this one looks like it came from a consultant in the audience. So any thoughts on a methodology as to how a company should sort through the options for partnerships, distribution, efficiency? You guys have done a lot. You're doing a lot. How do you get started thinking about this? How do you approach it? There's, I don't know, hundreds of companies out there in the floor. Where do I start and how do I start?
I think there's a reality in the world of there's many insurtechs and there's many partners who are in the space, and some will make it, some will not. Some are a good culture fit, some are not. So I think first what we're looking at is defining our own end-to-end value stream and understanding where we can develop partnerships that help us enable that better and more efficiently and to the benefit of our members. And then seeking out what are the insurtechs, what are the partners that can help us in that market, and then making sure, A, they're financially viable, have a good vision, have a good partnership approach, and culturally they fit with us, right? Because in the end, you're really on a journey together and helping each other grow.
Yeah, I don't think you can emphasize the culture of a company enough in thinking about how you approach it. Some companies are very analytically driven. I think the methodology is going to be, you're going to have incredible number of screeners. Others very much relational driven, and I think the biggest. Most important part of any partnership approach is problem definition. What are the business problems that are impeding a company from getting to where they want to go? And if you can get the answer to that question right, I think the who you partner with becomes much easier.
Interesting. So you're inviting a whole bunch of these guys into your building?
Yes.
How is that changing the culture at Nassau Re?
Just in surprising ways. We are a very small company. We have 600 people in our entire company, 300 focused on sort of what I call core insurance operations. We have 30 individuals in these companies that are trying to change the world. So think about the dynamics and the relevant basis. I was really cautious in promising startups that we'd have any POCs for them in our company, because as you all know, trying to go through legal, procurement, IT security, it's brutal. It's brutal. Forget that. Most people today have at least 3 or 4 jobs. It's not just one job. They're expected to do today. So, surprisingly, we actually have 3 POCs running at this point in our company. So, I think if you do it right and you kind of set the environment and make it as conducive as possible, good things happen inside companies.
Great. So listen, no fireworks, no mudslinging, no Jerry Springer, no Twitter outrage. But I think a truly terrific conversation. I'd like to thank Mary Beth and Paul and all of you for attending, and be sure to download a copy of the World Insurtech Report and Contact Capgemini for any further information. Thanks again.